Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, June 4th, 2019. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that price pushed back above the previous month's close and low at the very end of the session yesterday. We were seeing weakness throughout much of the day. Every price above the previous month's close was being defended. Price was trading near the session's lows for much of the day, and in the very last 30 minutes of the session, price rallied, and in overnight trading here, we've continued to push higher. One thing that I've mentioned before was we need to see how price responds to these lows here, because typically speaking, whenever the market has an elongated sell-off like this and trades and closes near the lows of that session or that range of the month, you usually see some sort of rejection back up. And again, any rejection that occurs here, any push back up, could be short-lived. It could be, 2, 3, 5 days of a bounce followed by another round of selling pressure as bears look to defend that bounce. So again, right now, showing a little bit of signs of strength. We are popping back above the previous month's low and close. Not a runaway rally or anything like that, but again, there could be a near-term bounce that takes us back toward 2790, maybe as high as 2800, and in that zone there could be an opportunity for bears to come back in and defend to try to push this thing back down. You see the PIMAs are starting to come down. The 8-period average is sloping downward. That's your trigger zone here for a bearish signal, and if price were to bounce into that zone with rejection, that could offer another opportunity for bears to come in and drop this thing. So again, right now very weak over the last 4 to 6 weeks, 4 to 5 weeks, getting a little bit of a near-term bounce right now, not very aggressive. I would say one thing right now: if the market cannot stay above the previous session's high price, there could be a trap followed by another round of selling pressure. So if price cannot remain above the previous session's high for long or rejects that area, that could lead to selling pressure in the day time frame. All right, let's take a look at the NQ right now. You'll see here the NQ had quite a different reaction. Tech heavy selling pressure in the previous session. Google antitrust talks and things of that nature. This was a very aggressive selling type of structure here for the previous session, where the previous month's low was rejected cleanly, and then price proceeded to drop away from that level by a couple hundred points. Now price did drop right into the monthly S25 PivotBoss pivot. That is basically taking the range of the previous month and then extending it downward. That 25%, that's the 25% level. It bounced off that zone inside day right now, and we are now still below the break point of last month. We're below the 200-day moving average. We're below all these major levels, and we have hit our 7,000 target. If you recall, over here I mentioned if price cannot stay above 7,300, we could be looking at a move down to 7K. That was the day right there where I mentioned any pullback, if it fails to get above 7,300, that could lead to selling pressure back towards 7K. It didn't take long to get there, and we have now achieved that target. Again, while we could bounce like the ES, we could see some sort of near-term bounce. That bounce could be seen as a selling opportunity by bears for another round of weakness. Again, if price cannot reestablish back above 7,200 here pretty soon, this thing could be looking at much more selling pressure ahead. If you look at this chart and compare it to last fall, it's already had quite a drop off of these highs. Here's the recent highs here. Here's major support there. It dropped away really quickly and reached that zone, and there was a quick 2, 3, 4 day bounce right here. That's the same thing we could see here, where we've sold off, we've gotten to this key point. Do we see some sort of near-term bounce? And is that bounce sold yet again? Very similar to what we saw last fall. Every one of these near-term bounces were offered in that type of market. Are we about to see that same type of price structure again? That's something that we have to consider. So overall, downtrending price action. We are at a cycle low. We could certainly bounce some degree, but that bounce could lead to another round of selling pressure, so keep that in mind. All right, let's take a look at crude oil. Crude oil showing an inside day, also a very narrow range price session right now. Comparatively speaking, 43% of normal. It's been averaging 2.3 points per day on a 10-day basis. 10 days being about this look back. On a 5-day basis, about 2.6 points. That's about this look back right here. So it's been a pretty aggressive couple of weeks here compared to what we'd seen before, even with the great rally that we had. Overall, this is a very, very bearish move through 55s, which is a very significant CLVN, a composite low volume node in the volume profile. Breaking that zone suggests more weakness, and any retest of that zone from below could still be offered, as it was yesterday. So price rallied right up to that point where the breakdown occurred and then sold right back off to lows. Now we're sitting here in an inside day below the previous month's close and low, and again, any bounce could still be an opportunity to be offered as price comes back to that 49.17 CVPOC. So after rejecting these highs and dropping, after seeing rejection here at the 63.50s and dropping, it appears like price is returning back to value. So at some point, 49.17 could be a major target to strive for there, and for the most part, any bounce could still be a selling opportunity for that target. You can see right here the 8-period average is dropping. The PIMAs are starting to provide some downward slope as well, so any bounce into that trigger zone, let's call it 57s, could still offer an opportunity to drop this toward 49s. So we'll keep that in mind as well. Let's take a look lastly at gold futures. Here's a look at gold. Gold has been super bullish, very, very bullish. We talked about the fact that we are at a point where we are about to see expansion. We could no longer see any kind of fair facilitation of trade, as it had chopped around CVPOC for a while, could not get below 1270s, and then we saw the failed low outside day here at value, and I mentioned this could lead to a breakout through 1305s, and if so, we could be looking at a rally back toward 1350. Over the last few days, we've seen an aggressive rally topping out so far at 1334.10, and while we are seeing a little bit of a hold and a pullback at these highs, very similar to these other markets, any pullback here could still provide an opportunity for bulls to jump on board to push this thing to the edge. Remember, we're keeping an eye on this key range back here. Let's bring this up. This is the key range to keep an eye on. That's 1349.80. Here's the lower end of that range at the 1280 level, and then you have the midpoint right here at 1315. The fact that price was not able to stay below this key range low suggested that we were coming back to the mid, followed by the potential to see a continuation across the key range. So overall, this still suggests that we have more upside to about 1349.80, and any pullback could still offer that opportunity to push it to that extreme. So right now this thing is still flowing to the upside, pullbacks to be defended until proven otherwise. Alright, that is it for now. We'll see how this develops the rest of the session. Remember, we had Fed Chair Powell speaking at 9:45 a.m. Central, so keep an eye on that. I will see you in the trading room. Good luck and trade well.